Okay, let's go ahead and get started. This is a meeting of the Municipal Audit Committee. January 16, 2019, we're noticed from 12:30 to 1:30 p.m. And we'll go ahead and start by identifying ourselves to the record and begin with the folks on the phone. Who do we have on the phone?
Joy Mariner from BDO is here.
Okay, anyone else?
Kelly Ruth from Controllers Division.
Okay, and anyone else on the phone? Okay, thank you. And then Mr. Falsey, you would continue?
Yeah, this is Bill Falsey, the Municipal Manager.
Fred Dyson.
Sam Thompson, I'm on Auditors BDO.
Pam Ellis, Acting Controller, Controller Division. Jin Chi with BDO.
Alex Slivka, Chief Fiscal Officer.
Mike Chadwick, Internal Audit.
Scott Lee, Internal Audit.
Suzanne LaFrance?
Felix Rivera.
Okay, thank you. And we have Barbara Jones from the clerk's office as well. Everyone has a copy of the agenda and materials. And we'll go ahead and hand over the meeting to Mr. Chadwick, if you'll take us through it.
Great. Every year we put together an audit plan that we present to the audit committee. And the audit committee is supposed to review and endorse that plan. And then once that occurs, then we present it to the assembly for their approval. So we're here today to talk about our draft audit plan. And this audit plan was put together with input from various departments, from the assembly members over the span of the last couple months, and with some of our thoughts. So right now we have some audits that we're continuing that we started last year and we're continuing to this year. Our accounts receivable, water diversion from Akutna, real property exemptions, which we plan to release today or tomorrow, probably tomorrow. And then we've just started an audit of purchases under $5,000. Our 2019 audits that we have requested, we have a Chugach Volunteer Fire Department. That's a follow-up. If you remember, we did one probably about 3 or 4 months ago. We released that audit and they said, please come back, which we don't usually have people say, please come back. So they asked us to come back, but they said, please do it at the end of next year, or this year, I guess, 2019, so that we have some time to implement those things that we need to implement. We have the Girdwood Fire Department, they kind of piggybacked off of Chugach and said, since you did something out of Chugach, could you do something similar to that you did out there, do it over here? And we said, sure. AWU, Intergovernmental Agreements and Radio Communications. Employee Relations, want to do tools and tool allowances. Basically, that's what does the contract say and what are we doing for tools and tool allowances. Finance is payroll and time, TORAs or transfer responsibility agreements. Purchases under $5,000 again. The purchasing department is thinking that that's something that they would like to do annually. So we'll see what we find on this first annual audit that we're doing right now. Health and Human Services, just looking at that we may have to change the title of that, right? It's now Anchorage, what is it?
Department.
Anchorage Health Department. I just looked at that. Anchorage Health Department. We have the WIC program and then Aging and Disability Resource Center, and those would be grant compliance audits. IT, business continuity plan. That's more of a fancy way of saying disaster recovery plan. We've done 2 audits of that in the past, but it's been quite a while since we looked at disaster recovery, especially with the implementation of SAP. Maintenance and operations, that was vehicle maintenance, that came from Mr. Dyson. We have a taxi cab compliance. This was something Mr. Slivka suggested, given some recent testimony about a month ago, wasn't it?
Before the assembly, actually.
Before the assembly. Parks and Recreation, Mountain View Community Center, Northeast Community Center fund utilization. Basically, we give them some money every year for operations. They want to know, well, what are we doing with that money? Or what are they doing with that money? Public transportation, cash handling procedures. That's something we haven't looked at for quite a while. Public Works is road service areas and street light charges. Then we have these sunset audits. These aren't anything anybody picked. These are by code. We have to do them. And this year there are, I believe it was 8. Last year there were 10. They kind of come up on 3-year cycles. Last year was 10, this year's 8. I think next year is like 2 or 3. I kind of wish they were spread out a little bit better, but that's just the way the code and the way they fell. We have some routine audits, the P-card program, P-card rebate, and then just if we want to do some cash control audits or year-end inventories or those types of things. And then we have some special studies, not necessarily audits, but more just informational things. The take-home vehicle costs, billing practices from ML&P, the custodial contract administration, the clerk's office administration. We did something earlier this year regarding elections, and the tentative plan is to do things on a 3-year cycle. So elections we look at down the road again. We have elections, administration, and the ombudsman's office, and just kind of rotate those every year. Right, Barbara?
Right.
That came from Barbara.
We requested.
That was something Barbara Chris. And then family leave practices, which is something Mr. Rivera requested that we, just some information about it. Not necessarily an audit, but just what's happening with family leave practices. So that's what we have for this year. It's a full audit plan. I think that will keep us busy for this year. Any questions? Any thoughts?
Mr. Rivera?
Thank you, Madam Chair. So, 2 things. One of the things that I had requested to be put on the 2019 audit plan, it appears we did recently. So I was wondering if I could get a copy of that audit on IGCs.
Well, IGCs is not an audit that we have done, but it is an audit that I understand is being, or a review or a study that is being conducted with OMB. So I don't know
So
what the status of that is.
in progress.
It's in progress, the last I understood.
So Suzanne sent a note, and I will make sure and follow up with OMB. It was the external firm, Parish Blessing, that's supposed to be doing that, and so we will get that information to you.
Thank you, Mr. Slivka.
And then I have one more thing, Madam Chair. So you stated that, particularly for the sunset audits, that you wish that they were more staggered out and that it's in code that they are the way they are. So is there any reason why we can't change codes to stagger them out more?
We could change code to stagger them out more. Yeah, it could be changed.
Could you work on that proposal with legal counsel? And
Sure.
if it makes it easier for your department, I'm happy to sponsor
Okay,
that.
yeah, we could look at something like that for
Okay.
for the next year. Yeah.
Okay, perfect.
Let me pause for a moment. We've been joined by Ms. Wenhoff.
Okay.
Oh, Mr. Dyson?
Thank you. I got distracted. So, what's the tools and tool allowances one about?
That one was suggested by employee relations, and in the contracts that various unions have, they have stipulation that they receive, say, $100 per month to buy tools and for tools or tool allowances. And they just want to know that if that allowance is being given to the people that are supposed to be getting it.
These are trades unions?
Yes, trade
people.
unions. Yep.
That'll be interesting.
Yeah.
And I would appreciate if during that, you had a list of the tools by trade and most tools except power tools don't wear out.
Mm-hmm.
You know, they can get lost and broken, but don't wear out. So there's some kind of a useful life there. But
Yeah.
I'd be interested in what is the process for replacement.
Hmm.
You know, I don't want to get down in the weeds on it. But,
Yeah.
and then if your analysis or the internal one says that $1,200 buys 2 sets of all the tools that tradesman would ever need, what happens to the money that isn't needed, you know, that's superfluous in that $100 a month thing?
Mm-hmm.
Yeah. I mean,
Okay.
you know all those questions, but those are the kind of things that come up.
Okay.
Yeah. in
Oh.
that. And I suspect also that some of the trades have a shop, you know, and then there are shop tools, you know, that belong to the facility, and then there are tools that the craftsman may have in his toolbox in the facility, and there may be tools that he carries with him when he goes off in his truck.
Mhm.
You know, and
Right.
I suspect there's some thinking about that, and I'd just be interested
Sure.
to know.
Yeah, we can look at that.
Yeah, I don't want you to go a lot of effort, but they ought to know. Your client, who you're auditing, ought to know the answers to those questions.
Sure. Sure.
Yeah, thank you, sir.
Yeah.
Any other questions on the proposed 2019 list of audits? I have one question for
Sure,
you, Mr.
okay.
Chadwick. With the transition to SAP mostly behind us and underway, I'm assuming that one of the big challenges has been removed to performing audits in the past that was encountered last year. Do you see any other issues with getting through what you described as a pretty full list? I know that, for example, staffing has been a constraint from time to time as well.
Yeah, staffing. It's funny you mentioned staffing. I just received a resignation letter today.
Oh,
And it wasn't because she was disgruntled or anything. She's moving to Minnesota to be closer to family. And, I guess it's family or loved ones, or I'm not sure who it is. But people she cares about, I guess. So it just received it today. And I was thinking, beginning of this year, we'll have a full staff to start the staff out. So we have to start that recruitment process again. So that could put a kink in this plan. So we'll just do the very best we can given the resources that we have. So,
okay. But if you were fully staffed, you'd be able to breeze through this, assuming there are no big IT or other transitions.
we'd
Pending.
be probably, I don't know, breeze through, but yeah, we could go through it. Yeah. Yeah, sometimes some things fall out for some reason or another, but so we hope to get through this. But yeah, this is a fairly aggressive plan for
Okay.
this year. Yeah.
Any other comments or questions from anybody? Okay. Ms. Jones has reminded me that the committee needs to vote to approve the audit plan. However, I understand I can't put that motion forward. Is that?
Madam Chair, actually you can. In Robert's rules, there is an exception for small committees and boards. And so this would be one of those exceptions. You could ask for a motion or you could make the motion.
Okay. And I just realized Mr. Dyson has stepped out, or is he in the hall? Oh. Okay. We'll hold off on that one for now, and then perhaps Mr. Rivera would be willing to make that motion
Sure.
when Mr. Dyson returns.
And just to be clear, is it a motion to approve or is it a motion to recommend the assembly approve?
Through the chair, what the code actually says, and it says that the committee is to review and endorse the internal audit's annual audit plan, submit the plan to the assembly and mayor for approval. So I guess your motion could be to endorse.
Yeah. Sounds like it. Thank you.
You're welcome.
Okay. Thank you, Ms. Jones. Thank you, Mr. Rivera. Okay, Mr. Chadwick, you want to continue with the agenda and then we'll come back?
Yeah, I think that's all we have. I think the update, the item B, I believe that's for Sam and BDO.
Okay. Okay, well, let's go ahead and continue on with item B. Actually, here's Mr. Dyson. We're about to, Mr. Rivera is going to put forward a motion, presumably to endorse the internal audit plan to the rest of the body. So, Mr. Rivera?
Thank you, Madam Chair. So I move to endorse the 2019 audit plan for recommendation to the full assembly.
Second.
Okay. Ms. Jones, how should we conduct the vote? Can we just show of hands here, or?
Yes, Madam Chair, you could do a show of hands. One of the interesting things about the audit committee is that it's specified in the code who are the members.
Okay.
Or if you'd like for the clerk's office to do a roll call, we could do that.
Actually, if you would take a roll call, that would be great.
Very good.
Thank you.
Mr. Dyson,
Here, yay.
Mr. Rivera,
Yes.
Ms. LaFrance,
Yes.
Mr. Slivka,
Yes.
Mr. Falsey,
Yes.
and your third member is, I've forgotten,
Pam Ellis, the controller.
Ms. Ellis.
Yes.
Acting controller.
The motion passes.
Thank you, Ms. Jones.
Thank you.
Okay. Thank you, Mr. Chadwick. Okay, so moving on to new business, item B, update on the status of the 2017 audit by BDO.
I will turn it over to BDO, who has the presentation.
Thank you, Mr. Slipka. And for the record, would you repeat your name?
Hi, I'm Sam Thompson. I'm an audit senior manager at BDO, and then Ray Mariner's on the phone with us. She's the audit partner in charge of the engagement.
Thank you.
So I'll begin. So first, Madam Chair, members of the Assembly, members of the Audit Committee, thank you for the opportunity to be here to present today and for the opportunity to be of service of the municipality. This is my 8th year I've worked on the engagement in my firm. We're over 10 years now that we've had the opportunity to work with the municipality, and we're thankful for that relationship that we've had over the years and going into the future. So there's 2 documents that everyone should have in front of them. The first is about 13 pages, and it's paper. It looks like this. It says audit wrap up towards the center of the first page. And this is a document I'm going to go over first, and this is a document prepared by us, BDO, and only prepared by us. And it's required under our professional standards, and it includes certain information that we are required to present and share with you, members of the Assembly. You will be referred to as those charged with governance, and it's a particular role that is outlined in our professional standards that you play. So to go to the first page there, it's just to reiterate that we were engaged by the municipality to do the audit for fiscal year end December 31st, 2017. That engagement letter was signed in January of 2018. And where we're at, we'll go to the status. It's actually the first numbered page. It's about the 4th page through the packet. So as of January 16th today, we are substantially complete with our audit, and we are aiming to issue our final opinion over the financial statements in every major federal and state program that we've been engaged to audit next Monday, which is January 21st. At this point in time, we plan to issue what's referred to as an unmodified opinion over the financial statements, all their opinion units, and also each federal and state major program that we've been engaged to audit. Now, an unmodified opinion is the highest level of assurance that we can professionally render. So that's good. That's the aim of every organization that is being audited, to receive that unmodified opinion. And what that means is, per our professional standards, we've we've audited the financial statements and performed certain tests and procedures, and we are confident that the numbers in the financial statements are materially correct. Now, we're not confident that they're absolutely correct. That wasn't the scope of our work, and to do an audit to obtain absolute assurance would be almost impossible and would require us to be here for basically year-round, doing every single task. So we've issued our opinion as it refers to materiality, which is what we're engaged to do. And later on, we'll go over some of the numbers in the financial statements. It's important to remember that these financial statements are the property of the municipality and were prepared by management. They were not prepared by BDO. All that we are responsible for professionally is our opinion, which we render over the financial statements. I'm happy to report that all records and information that we requested during our audit was provided to us. So there's no scope limitations there. And the cooperation that we received from management was excellent. Our questions were answered. We were given access to everything we requested. We had a good working relationship throughout the engagement. Now, disagreements would arise from time to time. They're very trivial in nature, and we always reached a compromise or a solution that satisfied both parties there. Go to the next page, page 2, the results of our audit. As I mentioned earlier, we're planning to issue those unmodified opinions over the financial statements in the different major programs. The government's significant accounting practices and policies are disclosed starting in Note 1 of the financial statements. Every year, different accounting pronouncements and new standards will come out. The GASB, which is the Governmental Accounting Standards Board, which provides the generally accepted accounting principles which the municipality follows and the financial statements were prepared to. I think they're up to 90 individual statements, and the past couple of years they've been very prolific in issuing new statements. There was one statement in particular that had a significant impact on the municipality this year, and that was Statement 74, which is financial reporting for post-employment benefit plans other than pension plans. And it will have a more, the impact of it was restricted to the police and fire, retiree medical trusts, other post-employment benefit plans, which are accounted for in the municipality under as fiduciary funds. So they're included in the back part of the financial statements. I just want to throw out there that there's another standard we'll talk about later, known as GASB 75, which is the employer side of the OPEB standard that came out recently. And that'll have a much more significant impact on the numbers presented in the financial statements for fiscal year 18 and beyond. There's no other changes in significant accounting policies and practices that we're aware of or that we believe should have been made during the year. The next section here refers to significant accounting estimates. And so estimates are what estimates are. They're items that management are inherently uncertain. Management has input into determining those balances at year end. The more significant estimates are broken out here. The first relates to asset impairments, and this came about this year as it relates to the implementation of the SAP system due to the number of defects and the issues that arose when the asset was placed into service and work was performed related to it. Management performed an impairment analysis. So it's important to point out that an impairment analysis is just an estimate. It's almost impossible to know for sure, especially with a software system, the true scope of any impairment, so therefore it's just considered an estimate.
If I could just stop you for 1 second. And by impairment, you were talking about placing an asset into service when it moves out of its construction period and is actually on the books as an asset, correct?
No.
No?
What I mean by impairment is, so you're correct that that asset did come out of what was referred to as construction work in progress and was placed in service. That was made, and we agree that that decision to place into service was correct under accounting principles. An impairment refers to whether or not the book value of that asset, which it's on being reported to in the financial statements, whether that value is correct.
Okay.
Whether or not there's been enough defects or issues related to the asset that value is now overstated.
Just a note, if I may.
Yes, Mr. Dicey?
I'm sorry, this is something I'm spring-loaded on, but your use of abbreviations and acronyms makes this confusing. And you may overestimate our capacity to understand in-group acronyms, but we don't have the background.
Oh, okay.
Plus, some people in the public would like to know what this is about. So I don't know. Some of these are fairly strange, but I'd just like you to make it a practice. If you're going to use an acronyms, define them the first time, in parents for us uneducated folks.
Okay, I'd be happy to do so, and I will explain every acronym in here. So the first one you probably came across is GASB, and that stands for Governmental Accounting Standards Board. So that's the group of individuals that create the accounting standards which the municipality is required to follow. And the other one, OPEB, stands for Other Post-Employment Benefits. So these are benefits other than pensions that are due, mostly healthcare related. And that brings us to we're almost there. So the second estimate after the asset impairments is allowance for uncollectible accounts. So these are the various receivables that the municipality has outstanding as of year end, balances that are due from third party customers or grantors or other individuals, and of course it's impossible to know exactly how much of those balances are going to be collected. So management relies on prior experience and historical trends of collection rates to determine what the allowance should be as of year end. The third estimate, the IBNR, and the IBNR stands for incurred but not reported. So this relates to medical costs that have been incurred in a fiscal year, but they haven't been reported to the municipality or to the plan providing the benefits as of year end. So an example of that would be as an individual goes to the doctor for a medical checkup, say December 25th. They've incurred that cost, say it's $1,000, and the municipality has a responsibility of making a payment through the healthcare plan on behalf of that employee. Well, that cost was not known as of December 31st because the billing might not be received until January, February, March, somewhere down the road. So to estimate what that liability is management hires an actuary, which takes into account different actuarial studies and current trends and other information obtained over the years related to the plan.
And if I may pause you for a moment, Mr. Thompson, for the record, we've been joined by Mr. Croft. Thank you.
The next estimate is the net pension and the net OPEB liability. So these are based by actuarial calculations, and they're prepared by licensed actuaries, and they're prepared by the plans. So the municipality has two net pension liabilities. One relates to their membership in PERS, which is the much larger of the two, and the other is the membership or the relationship the municipality has with the Anchorage Police and Fire Retirement System. Those are both two defined benefit pension plans that have a net pension liability as of year end. The municipality is required to record. The OPEB plan that has a net OPEB liability as of year end is the Police and Fire Retiree Medical Trust Plans. And those are only presented in the notes at this point in time under GAAP, but starting next year in the 2018 financial statements, both the municipalities' OPEB liabilities related to their involvement in PERS as well as Police and Fire Medical Trusts will require to be presented with the financial statements, basic financial statements themselves. Moving on down, other estimates, the landfill closure, post-closure obligations. This is the costs that are going to be involved to properly close and the landfill when it's all said and done and it's reached its capacity. So this estimate is based off accounting principles that require you to estimate the useful life of the landfill when it's projected to be full, how much trash or garbage has been going into the landfill on an annual basis, and also an estimate of what inflation will be.
Can I ask on that?
Yes.
Mr. Croft?
Is there any credit on that for the amount of revenue expected after this for methane reduction?
No, that's a good question. The revenue that would be earned on selling the methane, power generated by methane, that would be recognized as revenue. It would not roll into the landfill closure liability.
I continue to have a concern, which I've stated before, Madam Chair, that while it's very prudent, and we hadn't in the past accounted for closing costs, and it's good that we're doing it now so that we're prepared when it reaches its life. That the other thing that has changed, though, is that we now get significant amounts of money. So there could be an extended period where instead of just costs, we have income and costs, and that might be then overstating the obligation there. I don't know how under your rules, your accounting rules, to reflect that, but it does seem to be reality. So I continue to look for a way to have an adequate amount set aside, but not one that is excessive given what we know about what we can get.
Okay.
Thank you, Mr. Croft.
There is a restricted investment balance and is maintained in the solid waste fund. It's related to the landfill closure liability. However, for GAAP purposes, you can't net those, so the liability has to show at gross. Finally, the last significant estimate in the financial statements relates to environmental remediation liabilities. So an example of this would be there's a gas station out there and the owner jumps town and all of a sudden it becomes municipal property, and that gas station has over the years has polluted the ground around it. There's a liability there related to those costs to remediate that land, and those are governed by GASB Standard 49. And really what happens is the municipality would hire environmental engineers that would estimate would come up with a list of procedures that could be performed accomplish the remediation and also the probability that any one of those procedures actually would be followed up on. And that's how that estimate comes about. We noted there's no change in the processes or significant assumptions related to these estimates in 2017. So to move on, the very bottom part of page 2, where it starts talking about uncorrected misstatements. So when we do our audit, if we become aware of balances and we believe are greater than clearly trivial, that the municipality, we recommend, should make a change in order to properly state the financial statements. Now, these don't have to be material issues. They could be. They're just amounts that we believe are greater than clearly trivial by our professional standards that need to be adjusted. And so what we will do is we'll make a suggestion to the municipality, and they've agreed to correct one of these statements and had to relate to port inventory. And during 2017 and 2018, the port became aware of steel sheet pile that was not on the books properly. So port went out, counted the sheet pile. We came along and counted it as well. We came up with, working in conjunction with management, we were able to arrive at a balance of what we thought the sheet pile should be worth for an accounting purpose. And we suggested that management make it adjust their books to reflect that balance in which they actually did. So that balance has been corrected at year end. And going to page 3, there was 5 uncorrected misstatements. So these are amounts greater than clearly trivial, but were not material. And we recommended that management post or make an adjustment to the financial statements for, and they elected not to. Now, making that election not to adjust the financial statements is not indicative of any type of wrongdoing or trying to fudge the numbers in any way. Most of these adjustments had to do with the timing in which they were found. It was very late in the game, and the cost of doing so to make the change outweighed really the benefits because the amounts were not material and didn't affect our final opinion. We're still able to issue unmodified opinion even without these errors being corrected. So I'll go through the 5 that we came about. The first, item number 1, relates to depreciation expense related to the SAP system. So as everyone knows, SAP was fully placed into service on October 1st of 2017. So as such, the asset should have started to accumulate depreciation. So 3 months of depreciation expense should have been recognized in 2017 related to the SAP asset. And we estimate that amount to be $1,952,646. This adjustment was not made. Because of that, both depreciation expense and accumulated depreciation in the Information Technology Internal Service Fund and also the Governmental Activities Opinion Unit are misstated by that amount. It's an immaterial amount, however, still required to be disclosed. The second item had to do with construction work in progress costs that we identified that were related to the SAP project. But these costs were incurred in 2016, however, they were not properly recorded in 2016. Instead, they were recorded in 2017. So we just suggested that management go back and adjust the opening balance to properly reflect the year in which they should have been originally added to the books. Management elected not to. At the end of the year, however, though, the full amount was properly placed into, or was properly added. So the ending balance sheet is properly stated. This was just been an adjustment to correct the opening balance sheet. The third uncorrected misstatement we were aware of relates to legal contingencies and has to do with the Henry case that was settled. Because of when those actions took place, they should have been recorded in 2017. Management elected not to record the estimated $2.3 million related to that case. The settlement was brought against the municipality. As such, the litigation expense is understated in the general fund by that amount, and accounts payable is also understated by the same amount. And the fourth uncorrected misstatement has to do with an advance between the general liability and workers' compensation internal service fund and the general fund. So an advance is just a receivable in one fund and a payable in the other fund of money borrowed between the two funds. During the year, a transfer was made between those two funds, and a matching advance should have been recorded as well. That advance was not made. So as such, the advances to other funds and advances from other funds are understated by about $4.88 million. Finally, the last uncorrected misstatement that we were aware of relates to the water utility fund. They incurred costs in 2017, capital-related costs in 2017 that should have been recorded as construction work in progress, and a related accounts payable balance should have been recognized as well. Due to the timing of this, management elected to defer and will recognize those costs all in 2018. That amount was around $333,727. Finally, the last item.
Mr. Thompson.
Let me finish.
Oh, okay.
Finally, the last uncorrected misstatement. It's not really a corrected misstatement, it's just a disclosure. So an impairment analysis was performed by management in 2017 or in 2018 related to the SAP system that was placed into service in 2017. The results of that study concluded that the SAP asset was not materially impaired, and we agree with that conclusion that was reached. However, just as a disclaimer, it is possible that further items could come about at a later date and time that might warrant to readdress that impairment analysis as more information is known.
Thank you, Mr. Thompson. Mr. Dyson?
Yeah. So the uncorrected misstatements concerned me. And you could say, well, somebody's cooking the books, and then who benefits from that? Well, all these were understatements. I come up with 11.5 million in general. So one reason to do that is to be able to understate the unpaid liabilities or vulnerabilities in order to be able to continue spending patterns, all of which might be very valuable. So help us laymen, tell us how to think about unstated, unrecognized or unstated liabilities, how that's liable to bite us, and what kind of vulnerability we have, and are there any alarm bells that be looking for to tell us we're getting into trouble?
Certainly. So by understating liabilities, it's just that the amount that is due to a third party is being understated as of year end. So that could lead one to believe that there's more available equity, fund balance, net position at year end than actually is available. I'd like to point out, however, each of these items, both individually and when aggregated, are not considered material. So if there's any cause for concern that the financial statements are materially misstated due to these items not being corrected, that is not the case in our opinion. And it is by our professional standards, and we're bringing this up to you to disclose as you are charged with governance that these items were not corrected. So everyone is on the same page that these items are not reflected in the financial statements.
Can I ask a follow-on to that?
May I chime in briefly as well when you have a moment?
Go ahead, Joy. Sorry.
Yes, go ahead, Ms.
So,
Meriden.
the other big thing to consider here is the nature of the uncorrected misstatements, and the majority of these really have no impact to the just general operating budget of the municipality. When you look at them, there are several of them that really have no impact to the income statement side at all. So, for example, the construction in progress entries that are hitting construction in progress and accounts payable, it's really essentially a timing difference there, and it doesn't change the revenues or the expenses of the municipality as a whole. So it's difficult to take these and just add them all up and say this is the total of our misstatement, because really construction in progress and an accounts payable are both sitting on the balance sheet. There's no misstatement for some of these to the income side at all. The one that I look at here is, looking at from your perspective, the one here that I would just have as an understanding, a really clear understanding of is item 3 related to the legal settlement. Now that was actually not accrued back into 2017, but because the event that related to that legal settlement happened prior to the end of the fiscal year, you were required to record it back, but it wasn't recorded back. That's the only real one I can see, and Sam, correct me if I'm wrong, that changes the results of the revenues and expenditures of the general fund itself and the operating budgets. Even the SAP one, which is number 1, while it does, that depreciation expense would have impacted the internal service fund, it doesn't change the way that the intergovernmental charges are being planned to be recovered into that internal service fund. So it really doesn't change the operating results of any of the other funds by not recording that depreciation during the current year. And so really, just in the back of your mind, also think about the impact of these to really the operations and the activity that occurred during the year. The third one's really the one that I would say is the number to be watching. And so if you're looking at general fund balance, you need to adjust it to some extent for that $2 million settlement that's not recorded.
Well, and Joy, can I also add to that? This is Kelly Ruth from Controllers. With regard to that Henry case, the other thing to think about too with regard to that is that case was settled so late in 2018 that had we issued the CAFR on time, like during our normal time frame, that wouldn't even have been a 2017 transaction to begin with. So really that one's only coming into play as being a potential liability in 2017 because we are so late in issuing this CAFR.
Mr. Dyson, did you have anything further?
No. Just to clarify, you said clearly in person and here that it's immaterial. It's not a real threat out there, and the reason you're noting it here because it doesn't meet national or your company's standards of how it ought to be done.
Correct. Correct.
Thank you.
And by immaterial, is that more the nature of it versus necessarily the amount?
That's a great question. So we deal with materiality both qualitative and quantitative. And all these disclosures were related to just the dollar amounts in terms of materiality. We are not aware of any uncorrected misstatements or disclosures that would affect the financial statements just from a disclosure basis.
Okay, thank you. Mr. Slipka?
I was just going to ask a clarifying question. I think as Joy said, it was a timing thing. These things were all recognized in 2018. Is that correct?
Correct. It's our understanding, now we haven't audited the 2018 books yet, but it's our understanding that the depreciation that was not recorded in 17 will be recorded in 2018 to catch up that balance as of year in 2018. And also the $2.3 million in the general fund of that expense will be recognized in 2018 as well.
I mean, so for example, this item number 4, that intergovernmental,
It'll be,
reflected in 2018.
the 2018 financial statements will show the advance to and from correctly.
Okay.
Correct.
And I guess the final thing, which I think goes to the SAP impairment, that was one of the other challenges to what delayed the ultimate, has been delaying the CAFR. So through the chair that Representative LaFrance had asked the question about whether we needed to do an impairment study. And so the answer to the question, obviously, we did one. And the results were that there were a few items that were impaired and that we are going to reduce the value of the asset by those items. They are, off the top of my head, the total dollar amount is less than $1 million out of the $81 million that we spent. So, and the other point that Sam referenced is, on a go-forward basis, should we stop using some of the components that we are currently using, then yes, that would trigger an additional examination. But if we're using something that we paid $1 million for today, but we decide a year from now that we don't need that anymore, then that would again create an impairment. But at this point, since we're utilizing everything else in relation to the system, and in fact, because SAP is such an interrelated system that you can't really parse out individual pieces of it. That's why both the external person that we hired and BDO and their work looking at it determined that we were making the correct decisions.
Okay. Thank you, Mr. Slipka. And Mr. Thompson, we have about 10 minutes left. You started a little bit late, so we can go till about 1:35. We want to leave some time for audience participation, at least 3 minutes, unless other folks
Okay.
show up.
Excellent. No, I'll just hit on the highlights then.
Okay.
So
Thank you.
If you could please turn to page 5. we are required to evaluate internal controls over financial reporting. Now, we don't issue an opinion on internal controls, but we evaluate them in terms of how they relate to the financial statement balances themselves. Obviously, if you don't have a functioning control environment, it's hard to get assurance that you have accurate financial statement balances at year end. So we are required under our standards to disclose to you any items that we refer to as either significant deficiencies or material weaknesses. Now, material weakness would be the highest, I guess, the worst type of issue internal control finding you can have. During our audit, we were only aware of one material weakness, and that had to do with the SAP software conversion. And as of year end, and also throughout a good portion of 2018, there was not a properly functioning ERP system in place, so management was unable to close the books on a timely basis and operate with accurate information for a considerable period of time. The other items, we have 7 significant deficiencies, and these relate both to our audit of the financial statements and also the single audit work we did over certain federal and state programs. So the first one we had is related to port inventory, and I touched on that earlier when I discussed the corrected misstatement. There was not a count done of sheet pile inventory. As such, the financial statements were misstated. Management did not have in place proper controls to account for that inventory. The third one relates to the CAMA software, which is used for tax reporting purposes. There are some issues there related to program change, password complexity, and access of users. The fourth relates to the Child Care and Development Block Grant, which is a federal major program that we audited. And in doing that test, one of our required procedures was to look at the child care licensing application process. So we tested 25 child care licensing applications, and we noted one was awarded without any sort of review or approval being done by a supervisor in that department. So there was no controls put in place for a secondary reviewer of that application when the primary reviewer was not on site. The fifth finding we have relates also to the Child Care and Development Block Grant Program, and it has to do with inspections being performed by those various child care operators. We tested 32 child care facilities. All of them should have been inspected. One of them was not. We consider that to be non-compliance with the requirements under that program, and also a failure of internal controls. The sixth finding we have relates to the Airport Improvement Program, and it's a special test and provision finding. Work was done by contractors who are required to submit certified payrolls to the municipality. We tested 3. We noted in one instance certified payrolls were not being submitted. The seventh finding relates to the Federal Transit Cluster Program. And this is also kind of tied into SAP. There's, as everyone is aware, many issues related to payroll caused by the SAP conversion, people being paid the wrong amount. We noted one instance of the 40 payroll disbursements in which we tested where an employee was incorrectly identified as being underpaid. Actually, they were paid correctly to begin with. However, during the subsequent work, they were incorrectly identified as being underpaid. As a result, they were actually overpaid in error when the correction was processed. Finally, the last finding that we're reporting relates to the Federal Transit Program and equipment and real property management. When the municipality receives federal funds to purchase assets, it's required to track those assets as being federally funded. And if those assets are sold and they're sold for more than $5,000, the municipality is required to notify the federal authority which originally provided those funds, this would be the Federal Transit Authority, and either to return the net proceeds or at least alert the federal agency that this is the amount that we received from the sale. So the municipality sold approximately 30 vans that were funded via federal dollars in 2017. 11 of those were disposed of without over $5,000, and no notification was made to the Federal Transit Authority related to those sales. So all these findings have been, go ahead.
Question for Mr. Rivera?
I'm good with waiting until you start talking.
Okay, thank you.
I want to point out all these have been brought up with both the Controller Division and also for the compliance issues, the actual departments responsible for these programs, whether that be over at Merrill Field, Transit, or I guess Anchorage Health Department now. So they're aware of those, and they prepared what's referred to as a corrective action plan, and where they acknowledge the finding and what they plan to do to remediate the finding going forward. And that document, when it's finalized, will be included in our final single audit report that will be submitted to the federal government and made available to the public.
Thank you, Madam Chair. So, yeah, I'm glad to hear that these findings will be addressed, and I guess I'll just, to put it into the record, it scares me quite a bit to hear that potentially the software that does the assessments that eventually leads to our property taxes, the majority of the revenue for the city, is potentially hackable. That's, if I'm reading that correctly, that's a little bit frightening. We'd love to make sure we don't fall into that situation.
It would point out so the software sits on a mainframe, which unfortunately has, the limitation is on password complexity. And so part of the IT plan for 2019 is the implementation of a new mainframe, and we're of course also going to be transitioning to a new version of that software. So we are, yes, but very aware of the point that you mentioned.
Thank you, Mr. Slivka. Thank you, Mr. Rivera, for the question.
So to move on, the rest of this document is mostly the other required communications. It's just to let you know that our audit strategy didn't change. The timing of it definitely changed. We expected to be done much earlier in the year. We normally are done anywhere from Memorial Day to July 31st on a normal year. Due to issues caused by SAP, information wasn't available for us to complete the audit in that time frame. There's no other changes that are required to our audit strategy just besides timing. Like I mentioned earlier, all information that we requested was made available to us. We did incorporate the assistance of two experts. One would be our information system auditors. Now, both of these experts are employed by BDO. They're just outside the core engagement team we have here in Anchorage. So we brought up a group of actually two individuals from Dallas who specialize in information systems, and they evaluated the various information systems that the municipality has related to the financial statements. They're the ones that caught the CAMA issue. And also we enlisted the assistance of our in-house actuary, who reviewed the actuarial assumptions that were used to calculate the net pension and the net OPEB liability related to membership in PERS and the Anchorage Police and Fire retirement system and the Police and Fire retiree medical groups. Like I mentioned earlier, we had no disagreements with management. We're not aware that the municipality went out and did any sort of opinion shopping, going out to other accounting firms to solicit more favorable results. We're not aware of that. And finally, when the audit is concluded, management will provide to us what's referred to as a representation letter, and this just states who's responsible for what. It's a required document. It's completed every year. And after that, the rest of this, starting on page 10, is just a list of accounting standards that will be effective into the future, and it's just for informational purposes.
Thank you, Mr. Thompson.
That concludes my prepared remarks. It doesn't look like we have time to go over the financial statements unless anyone has any particular questions. Now, we can always have another meeting when the financial statements are issued to go over numbers in general if that's desired.
I think we may want to do that. Mr. Slipka, do you know if we have this on the agenda for tomorrow's budget meeting?
I'm not sure if this is on the agenda for the budget meeting, since it's related to 2017 and the budget meeting. We'll be probably talking about 18 and 19.
Okay.
But I think I would echo the suggestion that these numbers haven't really changed in the last several months. It's just a question of getting all the details done, but we would be very much willing to spend the next audit meeting talking about what the actual results look like.
Okay. That sounds reasonable to me. Does anyone have any thoughts on that? I mean, I agree we don't have time today to go into it. Okay. Any other questions or comments from the committee? Thank you very much, Mr. Thompson, Mr. Chadwick, for taking us through that. That brings us
Actually, I do.
Mr. Wimhoff, or Ms. Wimhoff, sorry.
I'll take anything. Mr. Dyson did make a comment, although actually should know he's not in the room at the moment. But the comment about the acronyms, that would be a really nice little glossary at the back of your reports.
Excellent.
You know, just little things, because usually you can figure them out, but sometimes you have to look around. So yeah, I think that'd be really cool when you present again to have that little glossary of acronyms.
Thank you.
Thank you, Ms. Wimhoff, for that. And I will note that Mr. Dyson left the room at 1:27 p.m.
122.
Okay. Or 1:22. Okay, this brings us to the audience participation part of the meeting. Mr. Haberman, would you like your 3 minutes? Whenever you're ready, sir.
My name is Eugene Haberman. I represent myself, follow the public process. The public process is an appropriate decision made by the governing body of all right public interest. I'm very concerned of the way this meeting was handled, of all subjects dealing with the audit. Note for the record, I see it says draft version 6, date 1/15/2019. That's yesterday. And the end result is, what do you got here? You had a vote on approval of one of the items here today, and without any hearing to the public. And also, how can you possibly approve something when you don't have a fair chance, you as governing body members and the public, to review the documents? This was fast-tracked. Obviously, I don't doubt there's a lot of time involved preparing these documents. But these documents prepared and released when? At the start of this meeting. And note the date of the version 6 says 1/15/2019. Is that fast-track and going for approval? Is that respect for the public? Is that respect for the governing body? Not at all. Now, I credit you for the hard work you do, but there's this chapter here that keeps on being neglected, connecting with the people and giving them a fair chance to review it and address it. But you didn't even do that with regard to the governing body members here. Today, you didn't have a fair chance. And you'll witness a scenario of a vote. A vote on what? Without hearing the public. I remind you of state law, not the Open Meetings Act. It says provide a reasonable opportunity to the public to be heard at these government meetings. Now, before I came along a few years back, there wasn't even a place for it for participation. But now you have also slide, and this ties with these other meetings. You put the work session, it says you don't have to do it. But this wasn't fortunately titled work session. But I'm seeing a lot now by work session, you can't even address it. So, again, look what you got here. You're not giving a chance to the public. You need to reverse whatever vote you did. And you also had even some assembly members leave early and needed to hear from public comment. And I would encourage you to start asking questions to people such as myself, and not just say, we heard what you say, and be silent with what I say. And that's all I have to say, except you can do a lot better. But I do want to say one thing where you are doing better. Because I do witness when in closing, the Manchester Borough Assembly meetings were when they present to the Borough Assembly and there's a representative coming with an audit and the public, there's no documents whatsoever present, and all the documents among them at a Borough Assembly meeting, not even a committee meeting, a Borough Assembly meeting, and they approve acceptance with the public completely blinded. And at least in this regard, you have these documents out some way and not zilch. And that deserves some credit. Thank you.
Thank you, Mr. Haberman. Just 2 comments. You're correct. 122, I misread my own note. Mr. Dyson left at that time. And second, today actually what we did here in the committee was we endorsed the 2019 audit plan, this 2-page document, and it will go to the full assembly body, I believe, on it'll be on the January 29 agenda meeting,
Yes.
and will be voted on then. So if the public does want to weigh in, they definitely can.
One short question, permission. Just one short question, permission, Chair. My question to you as a body, I hear things go to the Assembly, but frequently, is this a situation that's going before the Assembly at the 5 o'clock portion and with no chance for the public to engage? Or is this going on the 6 o'clock portion where the public is going to hear as a public hearing? Or is this another example of reports where I've seen dealing with like sexual harassment policy?
And if I may ask Ms. Jones, is this an item that, this is not scheduled for public hearing, is it? The audit plan?
through the chair, I think Mr. Chadwick and Mr. Croft were ready to answer that question.
Oh, okay. Thank you.
She's rarely wrong, but she's wrong that I'm ready.
In the past, this has always gone to the assembly as an AM, as I recall, and is put on the consent agenda. If it's pulled, then. But normally in the past, that's always gone.
Okay.
But he refers to it as the 5 o'clock.
Right, on the consent
The
agenda.
consent
No
agenda.
public
yes.
opportunity, you could do it at 5 o'clock. Thank you.
Okay, thank you, Mr. Haberman. Any other questions or comments from anybody? Thank you all for being here. We are adjourned.
Thank you.